The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
Dear Goga, thank you for being with us and taking our questions. Let us start with the current figures. What are the main figures today, and what do they tell you about the agency performance overall?
Thank you for having me. Presently, we've been generating around 11.4% as of now. It's a current effective annual yield. But most importantly, we need to measure the net asset value in terms of the investment time horizon. Since launching the fund, it is January 2019, we have been generating 28% versus inflation that is 22%. So that our investment objective is to overperform the inflation that we are doing quite successfully so far, so that we overbeat the inflation by 6% as of now.
Mm-hmm. What does the special depository change in this picture that now we have it?
Yeah, the role of the special depository is very critical. I mean, it is required by the law, and it is not really the Georgian know-how to have the special depository in the investment infrastructure. It is international practice and standard, so that before specialized depository, we were not able to invest in capital market instruments, and afterwards, now we can invest in capital market instruments. Before, we were investing mostly in cash and cash equivalents, and now we can invest in capital markets globally, locally, and everywhere.
Following my previous question and your focus right now, when will you actually start investing in corporate and government bonds? And you also mentioned international markets and what you are looking over there.
Absolutely. I mean, as per our investment strategy, we will be utilizing that limit that we have as per the law, 20%, so that we will be investing at least 20% of our portfolio abroad, meaning mostly global equities. We will not be investing in a global fixed income because fixed income in hard currency denominated, yielding very low rate of return. Mostly we will be investing in equities and the shares and stocks. And law gives us the 20% limit, so that we will be using that limit 100%, and we will start doing it as soon as possible. At the moment, we are spending most of our time to build up the infrastructure with the specialized depository. So far, we were negotiating the deal, we closed the agreement, and now we are building and testing the operational side of the infrastructure. And once it is over, and it will be over very soon, we will be investing globally, and we will be overseeing local market where we can invest. So far, just to give you the more details about the investment strategy, we are quite skeptical about the secondary market that we have in the country, meaning the corporate bonds. Why? Because it is very small, and given our limited investment mandate, we cannot really invest in most of them. And if we check our investment universe, local corporate bonds mostly, we can only invest up to 100 million Georgian lari, what we have on the secondary market. So that we are looking forward to primary market transactions more, and we will be considering all kind of bond issuances that we will have on the market this year, next year, and going forward. Some of them might not be eligible given our investment mandate and investment requirements and concentration limits, but still we will be watching them, at least from the interest rate perspective and so on and so forth. So that we will be mostly concentrated on the primary market transactions, corporate bonds, if there is any equity, but I doubt that. As for the Eurobond markets, I mean the Eurobonds issued by the Georgian companies, we don't watch them aggressively. What for? Because the yield on them is very low. And if they are US denominated, 100% of the Georgian Eurobonds are USD denominated, and the yield is very low.
What should be the yield?
This is a very good question, by the way. I mean, yields should be, we are interested in all kind of yields in the sense that mostly it should be Georgian lari denominated yield. We are interested in fixed rate yield as well as floating rate yields. As for the fixed rate, it's hard to say. I mean, when it comes to invest, we have to analyze by that time. But to give you just this very broad and blended picture, we are interested in refinancing plus at least 2.5%, 3% fixed rate, 24 months, 36 months. I mean, 2 years, 3 years maturity. And as for the floating rate, it might be refinancing rate plus 250 bips, 300 bips, or TIBOR 3 months, which is lari yield. that Tiber plus 400 bips or something like that. So that we are interested in both of these kind of fixed rate plus floating rate.
You mentioned several times that at this point you are not watching aggressively the local market, but have you identified what type of companies might be of interest in you, say in future?
I mean, actually we are monitoring the investment universe very much, given corporate bonds, IFI bonds, and Euro bonds, plus international markets. And we are, given our investment mandate is quite tight, as we all know, we have a lot of requirements, and we will be interested in all kind of companies that will be eligible for our investment mandate. It really doesn't matter whether it is from a specific sector, bank or non-bank industry, state-owned maybe. If the company is good, if it has a compelling business model, strong P&L, strong financials, convincing management,
and right now we know that, for example, SES is thinking of Electrosystem is thinking.
Actually, I've never seen the financials of this company, and if the company decides to issue bonds and they have to produce a prospectus, which is a book on the company, we will be checking the prospectus. If the company has a good or a decent credit rating, for sure we will be interested in it. And it's hard to say from this perspective, but once it is available, and if the company has a decent financials and good business model and compelling business plan, why not? Yes, we will be interested in.
Yeah, I'm asking these questions because if you look at different international organizations, development agencies, international financial institutions, they all kind of make emphasis that this long-term lari might be interesting for developing capital markets in the future. Do you see this direct link to it?
You're absolutely right, and this is also a very good question. I mean, in order to develop the capital markets, we really need a long-term lari investment capital. You know, this is a very critical condition to develop the capital market. But this cannot be the solution for everything. You know, I usually come across this kind of question that, you know, so you have the long-term lari, where is the capital market development? And yes, this is a very critical.
It's our lari.
It is a very critical angle and a very critical condition that we need in order to develop the capital market. But to have the good development of the capital market, we need other factors as well. You know, it is a complex project. Let's put it this way. Economy is small. When the economy is small, it's anyway a problem to develop the capital market in a proper way. However, this doesn't mean that we cannot have a developed capital market. I mean, on one hand, we need to be talking to the issuers, companies to issue the bonds, and kind of convince them to issue the bonds and equities. On the other hand, we need to be talking to other financial investors and portfolio investors to invite them in Georgia and either convince them to invest in Georgia or invest internationally via Georgia. So that it's a kind of complex project. A lot of moving parts to be dealt with at the same time. But you know, the long-term lari capital is a must. And we already have it, and this is a very good move forward. And now we need to kind of deal with other projects that is related to develop the capital market.
Yeah. What about the dollarization of the system? Because that's another emphasis from these organizations that somehow this could speed up this process. Do you see a direct link there?
Yeah, I mean, pension funds so far has been contributing to the dollarization a lot because we are 100% in Georgian lari, and we are 100% invested in Georgian banks. So that given the content of the dollarization and what is it really about, pension fund already contributes a lot. Because again, you know, we are 100% Georgian lari and 100% in Georgian banks, and we really increased the Georgian lari deposits in this economy. So that we contribute a lot, and we will continue doing so. However, as I said in the beginning, we will be using our 20% limit, and we will invest globally at least 20% of our portfolio.
In the beginning of our conversation, you mentioned this inflation and how that affects long-term savings and pandemic. During pandemic, we see that Georgia hits new record highs of inflation. What is the strategy there, and how you have been curbing this impact of inflation on pensions?
Inflation is a general challenge for the world. And Georgia has been facing a high inflation. It is, I think, to take the history over the past 20 years, this is the second high inflation that we've been facing. And this is quite objective reality that we have locally, globally. And the way we hedge inflation is that we keep at least 33% of the portfolio in a floating rate investment. And we buy high interest rate at the same time. So 67% of the portfolio we invest at a high interest rate now, and we still maintain 33% of the portfolio inflation linked. Let's put it this way. That's how we hedge inflation at the moment. If we see that inflation becomes a systematic, and it is no longer a periodic, and we see that inflation is translated into a systematic condition, then we will increase our kind of allocation to inflation-linked floating rate. But since we believe, according to our macro analysis, and we really believe that National Bank's expectation is right, that this is a periodic inflation, and from second half of 2022, we will see declining inflation trend. Given this macroeconomic situation, we try to, on one hand, benefit of it, so that buy high interest rate, and as much as we can, and for example, buy 2 years, 3 years, high interest rate deposits, CDs, and if we are able, corporate bonds, and if we see that good corporate bond opportunities. And on one hand, on the other hand, as I say, we maintain at least 30%, now we have 33%, in a floating rate in order to be kind of linked to inflation. The way we do it, when we negotiate the floating rate deal, we usually tell the bank, or when the corporate bonds are available, we will have the same approach, that the rate should be linked to the refinancing rate. And if the rate is linked to the refinancing rate, now it is a floating rate investment. And if the inflation is systematic, refinancing rate will be reading the inflation for sure, and will be going up or down, so that then we will be linked to the refinancing rate.
Now that you will be investing more actively, and the pension agency will start working at its full swing, what are some of the main challenges that you will be looking at? Because you know that in the wake of this reform, there was a big debate whether it's risky, whether Georgia, being a post-Soviet country, can handle this reform, and many more. So what are some of the challenges that you are currently weighing in and looking at?
That's a very good question indeed. The major challenge that we've been facing is the tight investment mandate, which is right on one hand and the challenging on the other hand. For example, we cannot invest below than one notch below credit rating. Country credit rating is BB. We can invest in BB and BB minus only, as of now. That really narrows down our investment universe. I mean, this is one. Another one is concentration limits. We cannot invest more than 10% of the single issuance, and so on and so forth. I mean, that's why we are in talks with the national banks and to kind of easy down the regulations to some extent, for some period of time at least, in order to have more room for investing and to increase our investment universe that we have so far. Because 20% we can invest abroad, and the rest 80% must be invested in Georgia and in low risk instruments. And we don't have capital market in this country at all. We don't have equity market. It is completely not there. And if we check the fixed income market, as I say, local corporate bond market is very small, and given our tight mandate, it becomes even smaller. And Eurobonds issued by the Georgian companies are good, and liquidity is still there. But however, they yield so low that they are not interested at all.
What is the logic behind these restrictions, as you call them? And should we wait and see whether they are being used or not?
Logic is quite rational. I mean, logic is to invest in low-risk instruments. And since the inflation, since the reform is very new, it has been on the markets over the past 3 years, and that's why the law very explicitly says that the pension saving must be invested in low-risk instruments, and that's the rationale behind this. And this rationale is quite right, as I say, on one hand. On the other hand, we really need investment universe, and that's why I think that we may amend the law a little bit in order to have more room and more scale for investing and to increase our investment universe.
And you are currently in talks with NBG?
Yeah, we are currently working with the regulator on this matter and the investment board as well. And we may be able to change or amend it to some extent, or we may not be able to do it. But at present, yes, we have banks where we deploy our investments, and banks will pay good risk-adjusted return. We have T-bills that we will be also watching and might be investing in T-bills, I mean government treasuries. And we will be considering all kind of capital market transactions, mostly corporate bonds, local Georgian lari corporate bonds, and we will be watching all of them and considering for investing. And the rest 20% we will be investing globally. And as for the global investing, we have selected this MSCI World Index. This is the Morgan Stanley World Index. It's a quite diversified global index. We have selected several mutual funds and ETFs that follow them, and we will be investing in them. So that in the beginning, in terms of the global investing, we will be doing quite passive investment strategy. It will be index investing. We will buy ETF that is following the index. And that will be our approach in terms of the global investing, because we have to be doing it, as I say, in a quite low risky approach.
Yeah, following the same logic.
Following the index, that will be. But after, when it comes to invest in a medium risky portfolio and high risky portfolio, then there might be some stock picking globally. That's, let's select one specific company or another specific company. But as of now, for the next year and a half, until we have to be under the low risky portfolio, we will be doing index investing, which is a passive investment strategy. Okay,
so can we please calculate for our viewers if we take an average salary, which is around 1,300, so somewhere there, what would be, for example,
saving, right? We have this calculator that we've been updating, and by the way, we will be launching the kind of version 2 of this calculator soon. But as per the current calculator, if, for example, the person has a 1,000 Georgian lari salary and the person is 30 years old, I mean the participant, and by the time when he or she gets retired, her or his saving will be up to 200K, and per month it will be like in the range of 1,500 to 2,000 Georgian laris. Depends on salary rise, depends on the return on investment. But we think that if we combine Pillar 1 and Pillar 2, Pillar 2 is our pensions reform, Pillar 1 is the pension reform that is paid from the state budget. And if we combine these two when the person is retired, we think that there might be at least twice more salary, twice more payment than the person has the salary at this moment. But there are a lot of inputs and assumptions when you do the calculation of the pension calculator. Why? Because the salary might go up, the return on investment might be different year on year, and it's very hard to do a very specific calculation. But according to the current expectation, we think that in case there is an average salary, and in case the participant is from 25 years old to 30 years old and starts saving, he or she should be able to get twice more than the salaries.
If you were ranking Georgia, you were mentioning indexes. Where would you put Georgia looking at its neighbors, or wider at the region you pick? Like,
do you mean the pension reform?
Yes, the average pension after the yield of the pension reform in the
that's
in,
right.
in the long
last
run.
year in 2022 we did quite well as per the OECD report, and this report is already available, and we will be publishing some infographics on that as well. Yeah, we made 7% real return, which is third in the world. Only Mexico and Hong Kong did better than we did. But you know, OECD covers more than 200 countries, so we were third in 2020. In 2021, the report will be available in 2022. For 2021, the report will be available to 2022. Let's see how we did. But last year we did quite well. And in terms of the asset growth, last year in 2020, we were #1 in the world. Asset went up 128%, but I mean contribution plus return on investment. So that and this is because of the reform is quite new.
Yeah,
and,
base effect is there still.
The very low base. You know, in 2019 the base was very low, and that's why compared to 2019, this is upside was very high. I mean, 128%. But going forward, I doubt that we have that high growth in terms of the asset growth. But very important is the return on investment and the real return, how much we generate in terms of the real numbers. And according to these profitability numbers and performance, we did quite well last year. Let's see how we do this year as per this independent appraisal. Yeah.
Well, we'll see you with that topic in the checkpoints then. Thank you so much.
You are very welcome.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.